How's it going, everyone? Richard here, and welcome to the Ninjacators Morning Bell. Right, guys, before we dive into the analysis part of the sessions, let's quickly have a look at today's economic calendar and what's scheduled for the rest of the week. So relatively quiet on the economic calendar for the US today. Of course, the interest rate hike decision is looming over the markets, and that's scheduled for Wednesday at 2 p.m. EST, as well as a FOMC press conference at 2:30 p.m. EST. Now, some guys or some analysts or whoever they are, the big talking heads, are expecting potential 75 basis point hike, with some even saying that we might see 100 basis point hike. So, whatever happens there, we would not know how the market's going to react. We won't know, but if it's anything compared to the previous interest rate hikes, we most likely going to see a lot of volatility around that sort of time. Now, we are currently at support at areas that we identified, or levels we identified on the ESNQ on Friday. We had small bounces up, but price has been testing those levels again during the overnight session. So let's quickly have a look at that. On the chart here, we have the ES set to a daily time frame. And as a quick recap, as always, I won't spend too much time on it. I potentially recap things a little bit too much, but in any case, we've seen support in June as price moved lower into a center median line of a long-term pitchfork. Moved up, reached the upper 50% dash median line, and reacted to the downside. Now, we were at that stage when prices moved down, expecting another move up. That didn't happen. We had a previous area of support that has then turned into resistance. Price pulled right into that area again, as well as moved into the center median line again of a pitchfork that was sloping to the downside, that we used to track what we believed was potentially the end of a correction that occurred here in June, again on 16th or 17th. Now, this subsequent bounce that we've seen to the upside, very strong. Like we said before, we expected to see a nice clear 5-wave move. We thought that might have been a third wave, with a fourth wave potentially. Oops, why is that stopped? Going to move lower into an area and then see another bounce to the upside. That would have been very bullish, and in my opinion would have confirmed that a corrective move has ended here in June, both the ES and NQ. Now, that clearly didn't happen. We had a strong move down to the downside, found a little bit of support, like I mentioned, back into the center median lines. It's pretty interesting to see how these median lines continuously act support and resistance for quite a long period of time. I generally get rid of them as soon as price starts breaking above very important levels. In this case, and let's say from where price is at the moment, it has to break this upper median line and the upper red warning line for me to delete it. Although at that stage, if that would happen, then then it's obviously a good case to build that price is heading to new highs. Same to the downside. On Friday, we mentioned that we were looking at 3,860 and 3/4-ish, give or take level. Price didn't reach that while we were doing the session just yet, and that was Friday again. Of course, it moved into this lower median line, this green line again. Bounced a little bit higher, close towards the upper side of Friday's range, but during the overnight session now again moved lower back into that area again. So this really is the last sort of area where we could potentially see a bounce, but things are obviously not looking good, with especially these strong sell-offs from a price perspective or price structure perspective. It really looks as if we could still move lower. Let's say the indices might even move lower. Test these lows are set in June around 3,657. Now, with price being so close to there, like I said, you will need to see support really soon. But then again, we might see another acceleration to the downside. Sorry guys, my throat's very dry today. During and after the rate decision on Wednesday. So you'll probably have heard that let me just take a sip of water here. apologize for that, guys. That is really starting to look that as if, the indices could be moving lower in a Y wave. What I mean with that is that we potentially had some sort of an A, B, C move here, conjoined by WX axis, and that we might now see a similar move to what we've seen over here, materializing right now. So forget about where this is projecting lower to the downside. I think that's still a real possibility, and I think we will know as soon as Wednesday after the interest rate hike, or if, you know, maybe they don't even rate it as high as people expected, so we might see a bounce. But really sort of the last area to see support step in. Right, we might even see some calm markets into that session. Not much happening, but just keep in mind that we have identified the 3,860 plus minus level as support, and price has reached it twice now. All right, so lower than that, let's see, we get another strong break to the downside, then I really think the June lows are in danger of being reached at 3,657. So again, not really much to report or change to the analysis, although I do feel that this WXY or double zigzag, some people might call it, is a definite possibility. I've been saying this for a while. For one reason is that whatever happened here looks very similar to this move that we've seen here earlier this year. So a bit of a repetitive pattern behavior, and that's typically what WXYs or double zigzags tend to do, right? So yeah, crucial that we hold this level to keep the potential bullish scenario in check, although I did mention that it doesn't look like we have a nice 5-wave move into these previous highs. So yeah, going to be very interesting this week to see how the markets react, and again, potentially, well, I should say potentially, most likely going to see a lot of volatility around that time. Right, let's have a quick look at the NQ. Again, very similar price structure. Similar thing that we've seen here. We had a confluence of multiple market geometry lines running in different directions, one sloping upwards and one tracking this potential correction that ended around the same time frame as the ES did. Also expected a 5-wave move to the upside. That didn't materialize. It looks like we also had some sort of similar behavior as to what happened over here. Obviously they will follow each other pretty much. So straight sharp decline to the downside. So same thing here on the NQ, although it traced a bit more than the ES did from this previous move to the upside. We identified the 11,765 and a quarter level. Should actually be a little bit higher, which is right at this lower median line, which price reached perfectly on Friday and bounced back to the upside again on a daily time frame, and currently markets heading lower again. So they did act as support. Again, now the question is, are we going to start running sideways, see a bit of a relief rally, or are we just going to continue lower? Or are we going to set ourselves up for a massive short during the during and after the rate decision? You know, sometimes, and you've probably seen this many times if you've been trading for an extended period of time, even when things do look gloomy at some stages, especially with this inflation that's out of control, you know, what the market expects and how things, or let's say market participants expect, and how things actually, you know, materialize in real life can be two completely separate things. So maybe the markets are factored in a strong hike and we start seeing prices move back up again. But again, looks very negative at the moment, right? Very, very sharp decline. So below this support level, we got another support level in the NQ, which currently resides below today's candle at 11,642. Again, give or take, guys. and that level is obtained from this angular market geometry line that acted as previous support very accurately to the T when we've seen this bounce or the support step in around the 16th of June. So to the upside, guys, we might hit resistance again, previous lows over here, or reach one of these market geometry lines. But what I want to see is support step in here very, very soon, and also going into the interest rate decision on Wednesday. You know, are we going to be hanging around about here, or are we just going to see a continuous strong drop with a lot of momentum to the downside? Again, it's just a game of waiting, and we'll have to wait and see how things react. All right. That brings us to crude oil. Let's give that a little moment to load up. And on crude oil, although there's a lot of lines that I have on here, guys, and one of the reasons why we talked about this 87.72 level last week, I think we did that on Monday and on Wednesday, is that there was a market geometry line there, and I just have to redraw that quick. Selecting that high to this low to this lower high, and you see this green line that we have over here, low 50% dashed median line. Price could not stay above it, although it did close on it a little bit on the 14th, but immediately reversed lower. I won't say immediately, it actually tested a few times. There was a resistance area and prices subsequently moved lower. Above that we had, let me get the magnet mode off, this upward sloping center channel line over here that's also previously acted as support and resistance really well for a very long period of time. So you guys will also probably remember that you can even see how it perfectly touched that before. Remember, these lines were drawn ahead of time, they weren't there done after the fact, so very, very important lines to keep note of, especially if you're operating on a higher time frame. Alright, so in a bigger picture, I've been saying for a while now that this price action here is starting to look like either a ending diagonal or a leading diagonal. Now, ending diagonals, as the name suggests, typically end, obviously, like everything does. Though this is not a very beautiful one, but let's say something like this, and you get a strong reversal back to the upside. Or we're dealing with a leading diagonal where we have a first wave, a second wave, and all those, all very overlapping. Price action is typically how leading and ending diagonals operate. You can still count five waves. A 1, 2, a 3, a 4, 5. The third one cannot be the shortest in the sequence, which it's not. It has actually extended further than our first wave. That is obviously, if I'm labeling this correctly, nearly reached the 138.2% extension. So that fits those rules. Then a fifth wave could sometimes, not always, reach parity with your first wave, but with leading diagonals or ending diagonals, they are typically shorter in length. But we do have market geometry levels down here in the shape of this lower median line, the green one, that's also been acting as support and resistance quite a few times, where price might be moving in towards. And this might be the final leg of a fifth wave. So whether we're looking at an ending diagonal, and hopefully it's not an ending diagonal, because that would then mean that we're potentially going to head, or crude oil is going to potentially head back to new highs at some stage. Whatever time frame or how long that might take, who knows. But if it is a leading diagonal, even then, if we do have a fifth wave complete, then we'd expect some sort of a corrective move that retraces most of this part and then see an extremely strong decline afterwards. Again, forget about these projections. I'm just trying to give you a sort of a expectancy, a path of expectancy, if that makes sense. So we had one straight move up again. Are we going to see another partner for this first move to the upside, i.e. correcting a little bit lower, and then see another move that mimics that, and then move into this areas? That we can't say. But as far as resistance goes, price did reverse from that level. As far as support goes, we're looking at this zone. Let me just update it a little bit. Upper end of the zone, around about 78.69, 78.7ish, and the lower part of the zone around 76.80ish, right? Again, give or take. The lower part of the zone is where we have this upward sloping lower channel line, and the upper side of the zone is where we have this downward sloping green median line, lower median line. So I think those are still target objectives that can be reached, as well as at 100% extension level. That all falls within that zone. Again, how we get there, or how quick crude gets there, or if it's going to get there, who knows? It's been extremely messy price action. I've been saying this for a while. Probably not the greatest market to trade if you're a swing trader or operate on longer time frames, but potentially on a shorter time frames you could still trade this pretty effectively. So just be careful. I think we do head into this sort of area that this could potentially be very strong support. The current low on today's range is 81.73. Let me just drop in what this low was. Again, now we move to the November contract. That low is at 80.72. So crude oil can move really fast, wide ranges. So not far off that level, almost $1 off that level at the lower side of today's current range. So see a break of that area, then potentially going to move into the 78.69, 76.83 give or take area. But then again, expecting potential support to step in around that time frame. All right, and then finally, let's have a look at gold. Again on the daily. And what I want to show you on gold here today is why I'm thinking that this entire messy corrective move here is actually, well, I won't say actually, is potentially a fourth wave. Again, a lot of lines here. I do apologize for that. Maybe let's just get rid of some of them. Right, since these lows in 2016, I'm counting this as a first wave to the upside. A, B, C to the downside for 2, and this high that we've seen in August 2020, potentially the end of the third wave. Now, if that is the case, and we've also been seeing, similar to crude oil, but although it's been taking much longer, very messy price action to the downside. All right, and if this is a fourth wave correction, at least we know price should not move into the area of where you counted your first wave. And let me just find that properly, because we changed contracts recently. And let's just position that right where it should be on this contract, at 1,581.70 cents per ounce. So if you look at the bigger scheme of things, we reached a low on Friday at 1661.9. Again, in the bigger scheme of things, not far away from this level, which we'll call our invalidation level, that would negate this entire count to the upside, that this was a 1, 2, a 3, and that we're now busy with a fourth wave. Right, now if we zoom a little bit more into this extreme mess over here, then I suggested that we probably, or could still be seeing a expanded flat fourth wave correction. Trying to identify that if this is a correction, then what type of correction might we be dealing with, if that makes sense. So here I think we had a combination WXY for potential A. We had an A, triangle B, a C to complete this B wave, and that we've been building our way down in 5 waves to complete a potential C wave. And let me just go back to the daily. I think it shows up much clearer there, is that we've had this beautiful 5 wave decline when we started the service, 1, 2, 3, 4, and a 5. It's not uncommon for 5th waves in commodities to extend further than your first waves, or actually be longer than your 3rd wave, if that makes sense. So that fitted perfectly and beautifully the shape of a 5 wave potential completion of the C wave over here to complete the entire potential. At that stage we thought 4th wave correction. We had a very strong rally out of there, but then again a strong subsequent reversal to the downside. And here again you can also see how the pitchfork, and I love using shift pitchforks, that slope to the downside by simply using 3 anchor points, or the most 3 prominent ones prior to this strong decline, has been acting as support and resistance extremely well. Even here when we thought that price potentially ended that 5 wave sequence. Now we've seen another move to the downside. Now that basically invalidates this idea that we've seen a 1, a 2, I'll just get rid of that, a 3, a 4, and a 5. Okay, so the only other way I can think of this is that this is still a 3rd wave that somehow completed 5 waves like this, 1, 2, 3, 4, 5. So this is a 1, a 2, a potential 5 waves, or 3. We might see a corrective structure to the upside, followed by another move, potentially much later this year. And then we get a move to the upside. And then potentially this whole idea of the expanded flat is still valid. I think it still is. And then we get another move to the upside. So let me just get rid of that quickly before we end today's session. I just want to go to a 4-hour chart. How are we doing for time? Oh, we still got a few minutes left. There we go. We had resistance. This is now 4-hour. That was Friday, if I'm not mistaken. No, that was today. It was nearly reached, and we had another drop to the downside. Lower support. Currently at this lower 50% red warning line, in this case at 1656. And then below there, this lower red warning line that's been beautifully tested previously. They typically catch the end of very extreme moves and strong trending markets very well. Below today's current range at 1622 and a half. So that's definitely an area that gold can move into. Again, who knows how the market's going to react? What's the Fed decision? Is there going to be like total market annihilation? Are they going to raise it by 100 basis points? Has it already been factored into the markets? Very difficult to say. So we might just see sideways movement into that rate decision event, and then we'll have to see, according to how the markets react, if we should side with the bullish side on the ES or NQ, or finally start really going with that bearish interpretation, which is really looking more and more likely, in my opinion. Right, guys, so that concludes today's analysis session. Really not too much different to say than what I've said on Friday, or what we looked at on Friday. So guys, if you've got any questions, then please feel free to ask. We are streaming from our own private Ninjacators trading rooms. You can drop a chat in there. Let me know if there's anything you would like to know, and as well as the guys on YouTube that we're streaming to as well. You're more than welcome to drop in some questions there, and if not, then we'll call it a day, and we'll be back on Wednesday again. Cool. Right, if there's no questions, guys, then so be it. And you all have, or hopefully have, a fantastic rest of your day. And as always, have a good one. We'll be back at the same time on Wednesday again, as well as on Friday. Right, guys, take care that side. All the best, and